What up, HyperChange? Welcome to another episode of Sippin' and Schemin', the podcast. Today, I'm sipping on a cold brew from Black Seed Bagels, my favorite bagel shop in the East Village. Huge shout out to them. Today, we're going to be answering all of the questions that you guys sent in about Tesla. Should be a ton of fun. I'm going to be posting this podcast to SoundCloud, to iTunes as well. But a heads up, I'm looking to switch podcast hosting providers from SoundCloud. If you have any ideas, let me know. So you may need to resubscribe to the podcast on iTunes eventually in a couple episodes. But anyway, let's just get right into it. So I got a ton of questions. Only one of them actually came through a voice recording. So huge shout out to Will Bradbury for actually sending in a voice recorded question. I hope more people do that in the future. Anyway, let's just play that.
Yeah, so I've got a question in regards to the Fremont factory in California. Obviously, that facility is at 100% capacity now. They've got all these new vehicles they intend to manufacture, like the new Roadster, the Tesla semi-truck, the pickup truck, the Model Y. They're going to need to build a new factory in the USA at some point. I'm just wondering how they're going to afford to do that and possibly where they're going to do that. Are they going to build that near the Gigafactory in Nevada? Unsure how they're going to do this and just wanted some feedback on how you feel they could do that, Galileo. Thank you.
Awesome question, Will. Thank you so much. So my understanding is that Fremont is not actually at capacity. Capacity for Fremont is around 500 to 700,000 cars per year. They're only building, even with the Model 3 at 5,000 per week, around 250,000 units per year. So they could still double production from here in just Fremont. Additionally, I think the next Gigafactory, like they said, is going to be in China. After that, they're going to build one in Europe. Maybe the fourth one they would build would be in the US as a second Gigafactory here. If they do that, I believe it would be on the East Coast to cater to deliveries for customers in those regions. In terms of how they're going to pay for it, I don't think they're going to start building a second Gigafactory in the US for at least a couple more years here. So, it's still ways out before they would have to start paying significant amount of money to do that. Whether they're going to have to raise debt or sell more stock or use internally generated profits to do that, who knows? Probably a mix of all three, but it's too early to tell how exactly they're going to pay for it. But I hope that answers your question. All right, moving on to the ones that I got on Twitter. So, Yvonne, also huge shout out to Yvonne, buddy of mine. Elon often gives really optimistic timelines / presents ideas that are very far away without much clarity on when they will be achieved. Do you have a formula or a general set of rules for discounting the value of these things to the present? Would you find such a formula helpful? Great question. This is actually very similar to what I asked at the shareholder meeting directly to Elon Musk about whether we should be discounting all of Tesla's timelines with Elon time after seeing how off they were on the Model 3 production ramp guidance. And so, he said that he's a very optimistic person. So I just think you have to bake that into any sort of assumption when you look at Tesla is that Elon Musk is probably being very optimistic. There's also just a general rule of thumb, which is that in startup land, everything costs twice as much and takes twice as long. I would say that's a good rule of thumb when looking at any startup. So also Tesla as well. But, do I have a specific rule of timelines and, walking back Elon's estimates? Not really. Although the one, sort of rule I do have is that if he says maybe or probably or we're going to try and isn't certain about it, then that means it's really far off. If he is really certain about it, then I think that means that it will be more likely on time. But the problem is that's sort of a hard metric to gauge is Elon's certainty through his tone and words. But I think if there is something to watch for, that's what I'd be looking at. But in general, he's always late. Okay. Next question from Ancora Imperando. Thanks for this one. Do you expect / wish Tencent to take a major funding role in Giga 3 in order to boost Tesla's roadmap? Yes, I think this is an awesome idea. I really hope this is what happens. Tencent invested in Tesla about a year ago. They own around 5% of the company. They're one of China's largest tech conglomerates. They own WeChat, which is like the Facebook and Venmo and, Instagram of China. And so Tencent is a really fascinating tech company. They also bought a piece of Snapchat. And so, they're willing to invest with these, American partners. I don't know if they played a role in helping Tesla get this factory set up, but I wouldn't be surprised for them to invest more money and supply some of the capital. But, you hit on a great point, which is how are they going to pay for the Gigafactory in China? That is still very unclear, but a partner could definitely come in and Tencent would be my first choice. Alec, I hope I'm saying that right. Which legacy auto companies do you see as moving quickest regards to EV, and which do you see being left behind and possibly going out of business because of the transition? I think it's going to be incredibly difficult for almost all legacy car companies built on top of the internal combustion engine to, really reinvent themselves for the electric revolution. I think starting from scratch is almost a huge advantage in this day and age. And that's one of the reasons I'm so bullish on Tesla. Just a tiny tidbit about this. Like, for example, the way that traditional auto dealers sell cars with the franchise model, and, they have these third-party dealers sell the cars, I just think is a really broken model, doesn't have consumers' best interest at heart, doesn't allow them to push electric vehicles because electric vehicles have far less maintenance, and maintenance is how most of those franchise dealers are making their money anyway. And so I just think there's a ton of issues with the legacy auto business model. I think, the expertise in the internal combustion engine doesn't translate to the electric drivetrain and to the software first cars that Tesla's building. So I think almost every auto company is going to be in real trouble unless they don't electrify their lineup as quickly as possible. They're just in a catch-22 there, because that would mean eating up an enormous amount of their profits, which is going to be really hard for their shareholders to swallow. So the combination of these factors makes me think that companies like Waymo, like Amazon, like Apple are potentially much bigger competitors to Tesla down the road than auto companies. Software is the defining component of the car of the future, and companies that have world-class software and technology teams will be in the best position to compete in electric vehicles. So I see Tesla, Waymo, Amazon, and Apple. Even though Amazon and Apple aren't really in the industry yet, I could totally see them coming in one day. So that's my answer to that. But I will say that the companies that I think are the most screwed is Ford. When Tesla comes out with the pickup truck, Ford makes almost all of its money on the pickups. I think that business is going to get decimated almost overnight when the Tesla pickup comes out. So I, in particular, think Ford is screwed. Kelvin, you asked something that a ton of other people asked. What do you think about Elon calling that dude a pedo on Twitter just now? Do you feel it would be beneficial for him to uninstall Twitter for a while and just focus on ramping Model 3 and designing BFR? Yes, I love Tesla. I'm still backing Elon Musk. I think he's an awesome leader overall, but this most recent thing he did on Twitter, calling some guy from the Thailand cave rescue a pedo, that's ridiculous. It's totally uncalled for. It's like third grade name calling. He clearly is emotional and just tweeted that out. He deleted the tweet since then. I don't condone it. I think it was a huge mistake. I think Elon Musk needs to learn from it. He's been going more and more off the rails on Twitter, and this was sort of like a culmination of that, where he really crossed the line. So I hope this is a wake-up call that he's needed, because it would be tragic for, it just kills me to see Elon's tweets in the headlines about name calling instead of the accomplishments of Tesla and SpaceX. And I really hope that Elon Musk realizes that tweets are not going to win any of these debates. Execution will, and you should be focused on execution, not tweeting nasty names. And so I'm really disappointed in Elon Musk, who's one of my heroes, from seeing that tweet. So that is what it is. But on the flip side, I will say Elon Musk's 22 million Twitter followers are in some ways an incredible asset, and no other auto CEO is this visible on Twitter. And I think this is a marketing machine that Tesla has been very smart to leverage in the past, which is, they can generate hundreds of millions of dollars worth of free advertising by Elon tweeting about something and then having a million journalists write stories about that. That doesn't cost Tesla a dime. It doesn't take them any resources. So I think in general, the way Tesla spends no money on advertising, yet has millions of followers on social media because of word of mouth, because of putting out good organic content, I think is a really winning strategy. And I think overall, Tesla has done a better job than almost every other automaker in leveraging these new platforms like Twitter and social media to get the word out about their products for free. And that's a huge advantage that's going to make them structurally a lot more profitable in the long term than car companies who rely on massive advertising budgets. So that's sort of the flip side of this whole, Twitter social media scenario. Tesla Army. I thought this was an interesting tidbit. Is a 500,000 car factory in China enough? I actually think that 500,000 cars a year in China, especially if it's to service regions around China, like Australia, maybe even India, or I don't know if they're going to need another gigafactory for India, like 500,000 cars per year for China, which is going to be by far the world's largest electric vehicle market when the time this factory comes online, actually is a little bit lower than what I long-term would like to see Tesla doing in China. So I do think that is a really interesting little tidbit there. And maybe they're just lowballing that 500,000 number, but I thought that was interesting, so I wanted to throw that in there. Gift 4000, who I have to give a shout out to because he sent me a couple t-shirts, like that one that says Drive the Future that I wear, that some of you guys have asked about. So awesome merch. You guys should definitely check that out. He says, do you think Tesla will monetize the charge network to let other EVs charge? If so, when? This is, this whole debate about whether they should open up the supercharger network for other automakers that I asked about on the last conference call as well. Frankly, I really hope they don't do this. And I know this goes against what Elon said, but I think there's a massive moat in what Tesla's doing and has built with their supercharger network. And I think it would be very, very wise to keep that as a closed ecosystem, because the incremental sales and competitive advantage that generates is way more than the couple $100 million they would get by opening it up and letting another automaker use it. I just think this has taken years and years for Tesla to build. It was a tremendously risky move to start building the charging network before EVs were going mainstream. This is something no one would have bet on. Tesla bet on it early, first, and with a lot of capital, and I think they should reap the rewards of that by keeping it closed for at least the time being. So do I think they will monetize it and open it up? No, and I really hope they don't, but Elon has said they are considering it. So that is what it is. Okay, this now is 2 questions. Eric Snappot. Will Tesla continue to increase service centers as time progresses to adequately deal with increased Model 3 demand? How will this affect Capex? This ties into another question here from Sean Mitchell. Not sure if right context for your podcast, but I've always wondered how much money Tesla spends on service. I love when they tell me I don't have to pay for a repair, but wonder how that looks on the balance sheet when they absorb those costs. Thanks. So I don't think this is on the balance sheet. I think it's on the income statement. And as you can see, Tesla does break out its revenue as services and other, and cost of revenue has services and other as well. So you can see exactly what's going on with the service numbers there. So Tesla's philosophy on this has been to operate service at a 0% break-even margin, because they don't want to make money on service, because they don't want to incentivize, their dealers and their service centers and their stores to perform unnecessary maintenance just to make money from you. So I love Tesla's philosophy of 0% margin on service. But as you can see, they only generated about $263 million in service revenue in Q1, but they lost $381 million. So they're losing a ton of money on service as the Model 3 ramps. I think this is a combination of factors, which is first that the early Model 3s coming off the line had a lot of production issues. Those have since been solved. That was clogging up service centers. So that Tesla took a hit for last quarter. And like Eric's question here, I believe Tesla has expanded the capacity for service centers and has the ability to service a lot more cars, and they've been spending up front to build out that service capacity, and that's why we saw the service revenue or margins look so awful in Q1, because they're building out capacity in anticipation of all these Model 3s hitting the road. And as all these Model 3s come online and they start servicing them, then I think that service number balances out back to 0% gross margins. So I hope that answers your question. I hope I'm saying that right. Johan Vandelit. Why is it possible to order a Model 3 now without a reservation? Where are the 400,000 reservations gone? This is a fascinating question I don't have the answer to, but I wanted to highlight it. So if Tesla has 400,000 reservations on the books and they're building Model 3 at about 5,000 per week, let's assume even 10,000 per week, that would still take 40 weeks or almost a full year of fully ramped production to go through their order backlog. Yet they just open up the Model 3 order configurator to everyone in the US and Canada. So how can everyone order now without a reservation, expect delivery of some cars in 1 to 3 months for certain models, yet there's a backlog almost a year long of the reservation list? What I think Tesla's doing here is trying to solicit more really, really high margin, dual performance, and fully spec'd out Model 3 orders to get them into Q3 and Q4 to boost the profitability numbers. Now, I think that makes sense from a financial perspective, but I think that's a big, big mistake from a customer perspective, because all these people who waited in line for 2 years for this car are now getting bypassed by people who are just willing to pay more. I think that does more harm than good with your customers, and it would make me far less likely to put down a reservation for the Model Y when that comes out, just seeing how little weight Tesla's given to the order line or to the waiting list of Model 3. So I think this is a big mistake for Tesla. They're trying to juice the books with these higher margin orders. I don't really know what to think of it. I think they're thinking a little bit short term there, but that appears to be what's happening. Steven Zungi. Do you think a future capital raise via an ICO would be a viable option that could supply Tesla tokens, which investors can later use in the future for supercharger/Tesla network rideshare payments? Raise capital and make it functional after a vesting period. This is a phenomenal idea. And, a lot of people have been, pitching this whole tokenize the world theme in the blockchain community. And what that basically means is exactly what Steven pitched here, which is, Tesla can sell these tokens up front, which you can redeem for products and services in their ecosystem, like charging. I think that's a fascinating way to raise capital. I don't know if it makes sense to do now. It's very early. These technologies aren't proven or tested. But I think in the future, this is very, very possible to have some sort of Tesla token that represents a certain amount of energy that you can power your home or your car with. And I think that's a fascinating future and something I'm totally keeping on the back burner in my mind of how Tesla and blockchain could eventually integrate. So I just wanted to highlight that question, see if you guys have any ideas about it, because I thought that was a really interesting one. Thanks, Steven. Alec, did I already answer one of his questions? I'm not sure. Anyway, this is another good one. Does the Sandy Munro 30% profit margin on Model 3 change your projections? So I just put out an episode on this. Yes, I frankly, it doesn't totally change my model or my projections, but it just underlying gives me confidence that Tesla knows what they're doing. I mean, I think they learned a lot from the Model S and X, even though that doesn't seem apparent yet. And I think they're going to really have designed the Model 3 with a lot more profitability in mind when it hits scale. And I do think they need to achieve those 20 to 30% gross margins on the car to be able to, justify how high of a valuation the company has. And so seeing Sandy Munro, one of the industry's most respected analysts, have confidence and sort of be blown away at the profitability of Tesla's cars is exactly the reaction we needed. It's the exact reaction we should be hoping for and should expect if Tesla is going to be the Apple of the auto world and be incredibly profitable in the long run. They're going to need to hit those sort of gross margins. So seeing that come from not the company, but from one of the industry's most respected third-party sources after he's had a ton of time with the car is super, super promising. So I would say this totally changes, or this totally reinforces my confidence in the profitability and just how profitable on a per unit basis Tesla's cars are. So yeah, this has got me very excited for what the future could look like in terms of the financial statements with these higher margins. Alex Safahi, are we at a 5K sustainable since 2 weeks ago? Have they improved? Basically, he's asking, is that, infamous 5,000 week production weight for Model 3? Have they surpassed that? Are they still producing cars at that rate? Actually, the VIN registration data has been very, very strong. So I think Tesla is still hovering maybe just under 5,000, but seems to be pumping them out at a really fast rate. I mean, in my opinion, even if they can just sustain a production rate of 4,000 per week for the quarter, I still think they have a chance at making money. So if they can keep, it looks like they're doing 5,000 a week just based on the VIN data that's been coming out. So I think they can do it. It's too early to tell, but I think they've learned a ton during this production ramp. And I think Tesla only gets better and better at manufacturing. I think they're going to pass the 5K milestone, whether it was yesterday, whether it's 3 weeks from now, whether it's a month from now, doesn't really matter in the long run. But the point is the trajectory is up and they continue to learn and make progress and execute. So I think everything's going really well there. So awesome email that just came in from Pat O'Shea, who is asking about, he would love to see a more sort of affordable version of the Model X to compete with the minivan market for Tesla. So I think this is a really interesting point he makes here of like, I have a big family. The average family has a couple kids. We always have all this stuff. We need a minivan to be able to hold everybody and cram it in there. The Model X, sure, it makes that work, but it's way too expensive for the average family. Totally makes sense. Are they missing a market here? He even says in his email that he thinks the minivan market was 1 million units per year at its peak, now around 500,000 per year. I don't know if that's in the US or not, but still a very large market for Tesla to tackle. So my gut and my answer here is I hope Tesla should address this someday. I actually think the Model Y is going to address this in a lot of ways, because even though you might think it might be a lot smaller than the Model X, I think it'll be comparable to a lot of minivans in terms of storage space, just because of the way Tesla is able to maximize, the components of its cars. It has the frunk. No other minivan will have that. That's extra storage space. Maybe if they make it a little taller and wider than the Model 3, it'll be a lot roomier. So I don't know. I'd be really curious to see how much of the minivan market the Model Y can cater to, because I think that's a big question, and I think that could be a big driver of the Model Y's growth. And if it doesn't fit all those use cases, then I do agree, like a Tesla minivan is a really interesting sort of concept. So yeah, those are my 2 cents on that. Thanks for the question, Pat. Okay, last one. Chingiz Amirov, perhaps reminding people that there is a huge difference between fundamentals that haven't changed and emotional factors, e.g. the Thai story dragging the stock down. People constantly conflate the two. This is why I'm actually more bullish on Tesla, and I bought stock a month or 2 ago than I have been in years, frankly, because I think the dichotomy of the story in the mainstream media and the market's perception of the company versus the reality could not be more different. The gap could not be wider. The reality is the Model 3 is at 5,000 a week. They've achieved this. Profitability is around the corner. This was the last bet the company project. The story's been significantly de-risked. The Model 3 is the iPhone of cars. It's outselling, every internal combustion engine car in its category. It's the best-selling US electric vehicle for 6 months in a row. I know I sound like a broken record when I say this, but these are the fundamentals. And I think the one place you're wrong, Chingiz, in that the fundamentals haven't changed is they have changed. They're improving every single day. And that is why I love being a Tesla shareholder. I think this company gets more valuable by the day. And therefore the intrinsic value of my equity shares is going up by the day. And meanwhile, the stock is going down or staying flat because of these headlines. And so, yes, I think it's frustrating that Elon Musk is tweeting this BS. He needs to stop. At the same time, this is adding to the dichotomy in the value of Tesla, which is rising, and the share price, which in my opinion is below that, and just being suppressed by artificial factors. And so, Tesla is trading around 2 times projected 2018 revenue. I mean, this is the cheapest it's been on a price sales basis almost ever in the company's entire history. I think revenue is going to continue to grow at 50% plus per year for the next 3 to 5 years. I mean, I think the stock looks incredibly cheap at today's prices if they continue executing the way they have. So I think, yes, I think this is a really interesting point because it hits on this fundamental thing that I feel with Tesla right now, which is the juxtaposition between the reality and the perception has never been bigger. And that is why I'm so excited about Tesla. That's why I'm going on every podcast I can. That's why I'm going on TV. That's why I'm making absurd amounts of Tesla content on this channel, because I think in 6 months to a year after this all plays out, it'll make a lot of sense of why I wanted to pound the table so hard, why I wanted to make my views so clear, why I wanted to stake my claim in the ground at this price when nobody believes it. Here's why I think Tesla can do it, and that everything that people think is impossible today will be possible and will be achieved in the next year. Profitability, Model 3 ramping, and once that happens, I think we're looking at a much higher equity price than we see today. That's just my 2 cents of the situation, but that's my gut feeling. So that's why I'm super excited about Tesla. Anyway, this is Sippin' and Schemin', the podcast. I hope you like this Q&A format. I want to do a ton more of these, so I hope you guys can send in more of like the voice recorded questions, because I think those are really fun. But the Twitter questions, also love those. Thank you so much for participating and engaging. Love getting all of your ideas and be able to have a conversation. Let's keep it going in the comments below. If you have any ideas, want to build on anything I just talked about, please leave it in the comments. Also, if you want to support HyperChange, please check out our Patreon page. Huge shout out to everyone who currently supports on Patreon. That's, along with YouTube ads, the main way we fund HyperChange, which is an independent media startup. We're going against the big guys. It's not cheap to do this full time and make all the content I do. So I really, really appreciate people supporting me on Patreon. Also, we have this premium newsletter on Patreon that I send out every Sunday, which is my recap of disruptive tech news, of Tesla news, and has usually a startup of the week or a chart of the week, a little deep dive section. So I think that is an awesome value for $5 a month, and all proceeds go to supporting the channel. So anyway, that's my end of the self-marketing plug, but hope you guys enjoyed the podcast. I'll see you guys next time. Peace.